Alright guys, as usual, this is this month or September's 3 stocks that we are looking at that you might be interested in as well. I personally own shares in Burma's Auto. Jonathan does not own any of the shares mentioned on the slides. And as usual guys, none of what we say is financial advice. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. So we start with B Auto or Burma's Auto. Not too bad, right? I think I covered the company around here. I mean, not covered. I personally invested around here. This would be about $1.70, $1.80, some of that. Has done pretty decent so far. But yeah. Profits and all that, especially for 2020, financial year 2023, pretty decent as well.
Yep.
Car sales are going crazy. No surprise, they are linked to Mazda.
Yes.
Mazda is a hugely popular car. If you know the CX-3, CX-5, all these different models, this is to be expected. And I remember having a chat with someone and the person said that, you know, one of the models, I can't remember which one, had like a 12 months waiting list.
Wow.
And it's just,
Okay.
It's the post-COVID pent-up demand, you know.
Yeah, but what's interesting is that this Q1, right, is actually 2x the last year's Q1.
Yeah,
and it's actually similar level to Q4, which is generally the highest sales generated.
And when you look at 2024, it's going to be...
It's definitely going to surpass, if let's say you prorate lah. You prorate it.
No, actually, it's going to widely surpass, especially if the Q4 is going to be bigger than Q3's Q4, which is really pretty big, right?
Yes.
Yeah, so anyways. So this is a rough breakdown. They have 3 companies that they mainly distribute, right? Mazda, Peugeot, and Kia. So they distribute. You know, they probably build fancy buildings to showcase the cars.
Yeah.
You go and buy. And they have this thing called completely knockdown or CKD vehicles.
Yes, correct. So that's about it. It's basically just showing you that sales of motor vehicles has improved quite tremendously in the span of 1 year. And not to surprise that a lot of analysts, when they see this report, right, I mean, the results, they are all very bullish. So they start to give a lot of high target prices.
I think this is the first time I'm seeing so many different reports. Right? MBAS, Kenanga, Power Bank, RHB, TA.
5.
From i3. I'm not saying
correct.
that's a whole bunch.
And actually, there's one more, which is Maybank, but it's not inside i3. Okay. So this is the Maybank's one. Their TP is actually 4 ringgit 14 cents.
So this is like 30 over... wait.
No, it's like
double.
It's almost double.
So they are the most bullish.
Yes, correct. And why they are bullish is because they kind of think that maybe there's some sort of like PE re-rating. I believe because Burma's Auto, it's trading about 7 to 8 times. They think that it's worth like maybe 14 to 15 times with these earnings at 386 million in financial year 2024. Right. Yeah.
So why, sorry, can you repeat, why do they think that the PE is going to be re-rated?
It's just it's matching what a car distributor should be at on average, all of the global and also the local players. So they kind of think that maybe 14, 15 times is where they should be at.
And they're only at 6 for 2026.
So far they're at 7, I think it's 7, roughly 7 to 8 times. So that's why you can see there's a double in share price.
Okay, simple enough.
Yeah.
So this is the shareholders, dynamic
shareholdings.
EPF.
Yeah, so what's interesting is that EPF has been actually dumped the shares quite a lot. Yeah, even though they announced good earnings. So from 2021, they own 2 million. Now they own like 1 billion, 127. Yeah, which is pretty interesting. Just want to share you guys out. Okay, so this is the final comments. Is basically why they are actually making a lot of money is because of this CX30 CKD model over here. And also they did a lot of fulfillment of balance order for their Mazda 3. The pictures is not here, but I think it's somewhat similar to this but then maybe smaller type for Mazda 3.
Yeah.
And
they look nice also, that's the thing. They're affordable, nice to drive, easy to find repair shops.
yeah.
And they look pretty good.
Yeah. And I think is your friend referring to this model that has a lot of like
Could
backload?
be.
Yeah. Yeah, because this is very new only. It's like March 2023 is where they actually introduce it. So yeah, it could be this model. And they are trading at 7 to 8 times PE. And analysts thinks that they should trade around 11 to 15 times. That's why there's a lot of bullishness coming from them.
Re-rating.
Yes.
Yeah. So I mean, you can see. But so here is the risk, right? Okay, first of all, it's quite a low risk business, right? Just import the cars,
Then
market it, distribute, right? Very straightforward. The risk here is that the re-rating don't happen. Because you see, Malaysians are car-loving people, and we are somewhat reaching the limits really in terms of per person buying a car. I mean, like if you live in Klang Valley area, most people have 1, 2 cars.
Yes.
Right? At least 2 cars, right?
Yeah.
Your house, how many cars? 2,
3.
3. There you
Yeah.
go. Right? And for myself also, about there also 2 to 3. So we are at the limit of where the volume can be. And obviously with cars, the prices don't go up like crazy, right?
Yes.
It's relatively constant. And then volume also don't go up. Which means that the brand itself has to take away market share from competitors. So in Bermas Auto's case, people are... I remember 10 years ago, there's barely anyone who owned a Mazda. Everyone owned either Toyota, Pro-Dua, or maybe... in fact, I would say there are more people owning continental cars, European cars than Mazda. So you agree with that?
I didn't really pay much attention.
But definitely compared to Toyota, right? There's way more Toyotas than there is Mazda.
Yeah, correct.
But over the past 10 years, right, that I wouldn't say it has flipped, but Mazda has taken. So that's the only way I see that these car companies can actually grow, which is just simply market share.
Yes.
So in a sense, it's volume, but the total volume of cars doesn't really change. So it has to be based on its ability to grow earnings, which obviously Bermas Auto has shown. But the big risk is really the re-rating, because it depends on the perception that people have on the company, which could come true, which could not come true. So take note of that, right? It's relying on the market to push it up higher.
Or if you want to play safe, it's just whether they can double their earnings. If they can double their earnings, then
And take note that the PE, which is currently at 6, is actually lower, right, than 2022.
Yeah.
So you imagine that with the company having a better profile, the share price should actually go up higher. Simply because now Mazda is a lot more dominant. But yet we see the valuations lower. So it could either mean 2 things. It means that 1, people are sleeping on Bermas Auto, or 2, people don't see the enduring mode or enduring longevity of this thing.
Yes.
That is why people are like, okay, but yes, the price is going up, but the earnings is growing up faster than the price going up, because we are like, can you really dethrone Toyota?
Yeah.
Can you really be the next big thing outside of Pro-Dua?
Yeah.
You know?
Or dethrone
you can't dethrone Pro-Dua. I mean, well,
it's
you
tough,
can if you remove the tariffs. You can if you remove the tariffs. But look, Mazda is a M40 car. Right? It's an M40 car, and I would say it's probably the top half of the M40 and upwards.
Yeah.
Right? It's either the main car of the first half of an M40, or it's the spare car, is the drive to market car for T20s. Right? That's what Mazda is. So definitely they have done well. But again, if you look at the maths, the key thing here is psychology is a big part of this.
Yeah.
Fundamentals alone will not get you, like the earnings growth is not going to bump so big. It really depends on the market.
Yes.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Now the next one is going to be AWC.
AWC, yes.
So AWC, it is a very undercovered company. I mean, they own quite multiple businesses. They have a facility management and also a waste management business.
Interesting.
Which is the ROI is about 20% every single year.
It's pretty flat over the past 15 years or so.
Yes, correct. So why is this interesting? But before we get to it, this is basically the earnings and revenue. Yeah,
steadily going up.
So far, yes, revenue is going. It's going up, but then the profits, they recently made a loss because of a lot of impairments, because of concession business. And you can see that the cost is maintaining, revenues dropping, higher operating expenses than loss. So
okay, that's not a good sign because
And this is just a breakdown. They own like facility engineering and environment. So below here, I already write out what they actually do for facility. So basically, it's like concession type of business. They replace piping and infrastructure in completed buildings. Preferably, if let's say there's a project or property development is about to build, they will actually like help to do some pipings and stuff inside there. And another one is basically engineering, where they distribute components for heating HVAC, if I'm not mistaken, HVAC. So heating, ventilation, and air conditioning system. That one has not been doing pretty well. You can see that revenue is like very choppy. Then they kind of like make losses a few times already. But the one that is actually growing quite a lot is the environment. So the environment is basically automated pneumatic waste collection. So this one is very interesting because basically instead of driving a big rubbish car collector, the big lorry one, they actually created this thing, automatic system. So those who actually live in a condo, right, when they dump their let's say their rubbish inside I don't know what compartment, that rubbish will actually go down a vacuum through a underground, and then it'll go to the waste management center. So that is what they are doing, which is this business segment. And that ROI actually managed to help them make about like 20% of ROIC on average, which is very pretty good. And the last one is real. That one I don't really care much because it's very little only, and so far has not been doing pretty well in their business. So this is just a picture to show you what is the automated waste management thingy. So they throw rubbish inside the valves, then they fly inside the pipe underground, and then you go to the center. It's a very interesting concept. Okay, so why they actually made losses during that particular quarterly, right, is because they have this impairment loss on goodwill, and also they lost in terms of this dissolution of a subsidiary. So all of these actually compiled together and help make them losses. But I think this is just a one-off only. It's a very temporary thing. In the next few quarters, I think things will bounce back, and we can see that they will regain their profitability again. And why is this interesting is because they recently just acquired the remaining 49% stake in Stream Group, which is the automated waste management company. So they initially owned 51%. Now they want to own 100% of this company. So they're going to pay it in cash for 110 million. And they can do because they are in the net cash position of 90 to 100 million, if I'm not mistaken. So, but if let's say they full consolidate these Stream earnings, right? Because Stream is actually have been profitable since I think they actually listed. Not listed. I mean listed in a private company. And they so far, if let's say they manage to consolidate everything, right, it will actually increase their profit, to 33 million, which is pretty interesting. And the perception or the market has not actually taken notice about this. I think they don't really see much of an interesting thing move for this AWC. But then if you look at their ROIC for this Stream business, it actually has been pretty good. It's like 20% on average. It actually has been very good. And another thing that is interesting is that this Stream Group actually helped AWC to broke the 100 million revenue threshold in 2023. Very, very interesting company. And if you look at the valuation, right, if you add all the earnings, assuming they make 33 million in 2024, with this market cap, you're looking at about 5 times.
And this waste management thing is very recurring, right?
I wouldn't say it's recurring because maybe it has to do with like new projects or something like that. And this waste management is actually not only in Malaysia, it's actually in Singapore and other states also. So the international capture. So I think it's more on like new development or developments that want to incorporate this. So it's definitely going to cost more than just a lorry, a rubbish car collector. I think one of our research team shared that it's like 5x the cost or something like that, just to do that, the automated machine. But then the returns is actually much more better. You just need more people to adopt this automation system. Okay, so this is the final comments. Basically, they have a risk of impairment because they are doing a concession business. So let's say if they build the thing but the customer didn't pay, then that's a risk for it. Another thing is that the automated waste management has a very high cost to run. Just like I mentioned, about 5x than the traditional collecting waste kind of like business. But then the ROIC for this is about 20%, which is very interesting, and the market has not been noticing about this acquisition of Stream. So yeah, that's why I find it that it is a part of our watch list for September 2023. Any comments?
No, I think we will definitely be looking at this a little bit further. This is warrants a bigger digging compared to the other two companies.
Yeah.
Doesn't mean the other two are bad. It's my opinion. It'll be interesting because, the company is less than 200 million market cap.
Yep.
And there's a big change that's happening, right? Acquisition of a proven business model. So maybe we will do an update video in the future on this company.
Yep, maybe.
Okay, guys. All right, guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
Okay, the last company, MSM. This one is going to be a very quick one. Because it actually has nothing to do with fundamentals, but then the share price actually went up 40% in just a span of 1 month, which is very interesting. Okay, just I want to say, man, fundamental is nothing because they're still making losses. I mean, you're in a business where government is controlling the cost, the selling price of sugar, so that's why it's hard for them to pass the cost, especially for energy costs.
So what
to
is
customers.
very interesting about MSM is not simply because it's a raw material and there are already not subsidies but price ceiling. If you guys know the history, is that Robert Kwok made his first big bucket of money through MSM.
Yep.
Through sugar, right? That's why they always call him
Sugar King. Yeah.
But he has sold his stake to the government. Now, why the company has been underperforming for such a long time is because instead of a subsidy, they have a price ceiling.
Yes.
During Robert Scott's time, it was a subsidy. That is why he was in the business.
Right.
So when he was, when the government bought over, I'm not sure whether it's immediately, but certainly today in the past few years, is now price ceiling. Now, it's a sensitive thing because, and there's a bit of politics involved. It's like, why are we subsidizing a billionaire? That's basically the mentality. How can we be subsidizing a billionaire?
Yeah.
So today, obviously, the owners are different, but that hasn't changed. As in, that mentality. So that's why there's a price ceiling instead. Now, what happens when there's a price ceiling is that there is a limit to how much people can make. And in fact, MSM loses 50 cents for every kilo. Right now, I think the price of per kilo is like $2.80.
Yeah, around there. Yeah.
So their raw material cost, so the sugar cane that they get from Brazil and all that, is $2.40. So you got 40 cents per kg left for your OPEX, for your interest, if they have any debt. There's no tax they're losing, so there's no tax, right?
Yeah.
So that's very difficult. Now, to give you a case, typically, right, that the median in and don't quote me on this is through memory, but the median in ASEAN is maybe closer to 5 ringgit.
Yeah, 4 to 5.
People are selling at 4 to 5, right?
Yeah.
And in somewhere like Philippines, it's even higher, like 9.
Yeah.
And here we are only allowed to sell it at
2 plus only.
$2.80. And if we allow the price to float, right, based on the median market average, MSM could stand to make 1 billion ringgit every single year.
Yeah.
Now, here's the thing. The thing that really perplexed me and confused me about this is, why is this even an important thing to control? I'll give you a case. I think I asked you this question before, right? If a coffee costs you, let's say your kopi C or whatever lah, costs you
2 ringgit.
3 ringgit.
Oh, 3 ringgit. Okay.
And you ask for kurang manis or kosong, no sugar.
Still 3 ringgit.
It's still 3 ringgit.
Yeah.
Because it is so irrelevant.
Yeah.
1 kilo, right? You spend a few ringgit to buy 1 whole kilo of sugar. Do you think you can finish that sugar in a month?
Not so.
You'd be lucky to finish a quarter,
Yeah.
right? Even if you put like 2 spoons into every every coffee you drink, you still won't finish it. Your family won't finish it.
Yeah.
So it's barely contributing to inflation, and yet we still put a price ceiling on it.
Yeah, it's actually very interesting.
Yes.
And then also, our obesity rate also, is one of the highest right over here.
Yeah.
Why do you want to like put a ceiling in sugar?
Yeah.
Why not just let it roll and
Yeah.
then let people consume less
Yes.
sugar?
And so there's a danger in putting a price ceiling. You know why? So, okay, the perception of inflation, let's say right, if you're allowed to float, so it goes from 2 ringgit 80 cents, whatever it is, to 5 ringgit.
Wow.
So what if you are a newspaper and you want traffic? What do? Sugar price double,
Yeah.
right? But it goes from 2 something to 5 ringgit, right? It's not gonna affect you, right?
Yeah.
Maybe it affect some shops that use a lot of sugar. That's about it.
Yeah.
It's not going to contribute to inflation a lot. Now, no doubt, a lot of shops will take advantage of this. They say, oh, sugar prices went up. Then they're going to increase 20 cents when the cost of the sugar is not even close to 20 cents.
Yeah.
So anyways, now there's a danger because, yes, while you, as politics, you might care about the perception of
The people. Yeah.
but the flip side is, guys like MSM and then the other, because I can't remember the other company. Yeah, there's two sugar
Start with
companies.
C1.
Yeah.
Okay.
So it's a duopoly in measure.
Yeah.
They'll say that, look, if you're gonna keep losing money, we will stop producing sugar.
Yeah. And it's a duopoly that is owned by Tan Sri Said Mukhtar.
Yeah.
Yeah.
Yeah. So duopoly, right? Right. So but it doesn't matter. They've done a good job. I still get my sugar, right? I'm not gonna complain. If it's a functioning duopoly or monopoly, who cares, right? But here's the thing. What's worse? Sugar prices doubling or no sugar? Because, and I won't reveal, but they are on the verge of saying, right, hey, look, if you don't do this, we cannot we cannot produce any more sugar.
Yeah.
Because we're losing money. And yeah, sure, you can call it a government-owned asset, but asset still needs to make money, still needs to float.
Yeah.
Right? And another thing that really confuses me about MSM is why don't they do a floating market rate, but the government subsidizes 20%. So for example, if you let it float and it goes to 5 ringgit per kilos, the government subsidizes 1 ringgit. So you get that balance of we help the rakyat and we help
The
MSM.
company. Yeah.
That way both parties are also happy, right?
Yeah.
Because now it's just now the rakyat is not even happy, right?
Yeah,
Because
exactly.
even if you let it float to 9 ringgit or 10 ringgit, it's still going to be
Yeah, we're still going to consume sugar anyhow. It's just less only.
and then it won't affect the inflation. It's not like if they really press the sugar prices down, then my kopi goes from 3 to 2.
Yeah.
If that, then yes, please press it down. I love it, man.
Yeah.
But you see what I mean?
Yeah.
Like there's multiple things to balance, and now it has been actually not even heavily in favor of anyone, right? Because it doesn't affect the rakyat that much, but it's affecting MSM a big chunk. And people forget this, if you let it float, then MSM start paying taxes, right?
Yeah. Then it go back to the government, and then
So anyway, I'm not in the government, so
So why this is interesting is because right now the world is actually facing a shortage of sugar. So they actually forecasted about a deficit of 5.4 million, even though if everything runs like as per usual, 100, I think like 80 to 90% capacity rate, but then it's still not gonna meet demand. And then even India, the number 2 supplier, is also expected to restrict sugar export because they need to feed their own country. So the world is facing a lot of things. And what's interesting is that MSM also is a global player, and they kind of like ran 8 because they produce about 2.05 million metric ton per year, which is actually pretty high ranking. I mean, you can see MSM is actually playing a huge role over here.
You see, right? Robocop sold this MSM.
Yeah.
Now they're Wilma. Robocop's Wilma.
Come
Come on, man.
Yeah, man. It is what it is.
That's CSR, yes.
Yeah, CSR. So yeah, this is basically just the domestic and versus export kind of volume. So domestic, we need to have about 900 metric ton. Domestic consumption is about 1.5 million, which is pretty a lot. And their export capacity is about 1.3 metric ton. So I think they are gonna like expand their business, I think in Johor, a factory. I'm not sure how much metric ton, but it's definitely not enough to satisfy the world demand, even though they participate and help to export more. So yeah, sugar, that means sugar prices will go up even further, which also means maybe MSM will bleed more. It could be if their price ceiling is still the same. Cause the cost to acquire sugar.
Yeah, which is why I believe, and let me know in the comments, guys, whether you agree with my solution. But let it float, but the government subsidizes 20%, whatever. Right?
Yeah, correct.
We can discuss what the percentage is, what's a fair amount.
Yeah.
But just let it float.
Yeah, and this is another second thing. Maybe it's not really a reason why MSM share price went up, but they actually got a plan to swap Bernas and for MSN, which is pretty interesting. So yeah, Bernas is actually, I think they got delisted in quite far back, 2015, I think. Is it 2015? Yeah. But then Bernas has actually been also a monopoly in Malaysia. They kind of like distribute rice. But then so far they don't really have any implications of them swapping Bernas and MSM yet. And we also don't know how much percentage of MSM is going to be acquired by the tycoon, which is Tan Sri Syed Mota, who owns both CSR and MSM. So yeah, but we don't know what is actually contributing to the share price increase. But then either maybe maybe the market is speculating the government will start to float sugar price, or maybe there's some sort of subsidy, or maybe it's swapped with Bernas. But yeah, we could never know about this. Yeah, so that's just a conclusion that we have.
Yeah.
Right.
So yeah, guys. Yeah, just an update. You know, this is our FIRL Pro. If you like reports on companies, you want to shortcut your research. You know, we have 15-minute reports, less than 15-minute reports for you to read if you hop on to our FIRL Pro program. And the best part is, if you sign up and even pay money, you
have a 10-day
refund. Yeah. If you don't like it, just refund. Ask for a refund on email
or DMS.
We will give it to you, no questions asked. Except maybe we want to just find out what's the reason. That's it, right?
Yes.
And if you want to get a taste of what these reports are, go check out our free sample in the comment section and description. But whether you sign up or not, thanks for supporting all the way until the end of this video. And I hope to see you in the next one.
Bye.